name is Catalina Steenbakkers Galindo. I'm team lead market insights and business intelligence at AWA. I'll be giving you a brief overview of some charts that Corey already shared, but also just more insights into our cost index and to what we're seeing in the market and how it's reacting to the conflict in the Middle East at the moment. So looking at what I'll be talking about today, I'll first give you a brief overview of how we saw the market grow in Q1 2026 and what our expectations are for the rest of the year. I'll then give some insights into our cost index, as well as look into what exactly is the drivers for these price increases that we're seeing. Going to pass over this quickly. Like Corey mentioned, the cost index is part of our data transcripts that we publish on a quarterly basis, being two. There's one on labeling and product decoration markets, and one on the pressure-sensitive materials market as well. Again, these come out on a quarterly basis at the end of the quarter. If we look at how the market has developed over the past few years, we've seen a lot of volatility, as you can see with the large swings, especially in North America and in Europe. And then in 2025, we did see the market stabilize significantly compared to past years with some ups and downs in key markets. And it's not super clear from the chart because, of course, with the large swings, it's not as obvious. But in Q1, we did see an uptick in the overall label markets, especially in Asia and in Europe. And through our research, concluded that this was not solely due to overall demand growth, but in large part to some front-loading behavior in anticipation of price increases. We saw this especially going into the second half of March and going into April, which is Q2, so it's not on this chart. But we know that the trend continued into Q2 in April and May as well. And if you see the blue line, we don't have that same uptick. So that being the North American market, being that they have felt the impact of these price increases a bit later than the Asian and the European markets. But we do expect that to see that trend now going into and ending Q2. If we look at the label market by technology, again, a lot of volatility in the past 5 years, driven by several factors. I can name them all, but I think we're all familiar. You know, the pandemic, supply chain disruptions, inflationary rates, the energy crisis in Europe. The industry has faced a lot of headwinds in the past 5 years. Despite that, it continues to grow, even at a more moderate rate. And if you look at the different technologies, the technology or the market that has witnessed the most let's say volatility is the pressure sensitive label market, which represents a large share of the global label market. And so is a driver for everything that happens in the total label market. And if you can see in Q1, that's where we saw more of a, let's say, an uptick in growth driven by this front-loading behavior more than in other label technologies. Now taking a look at our cost index. So AWA at this moment tracks the European market and the North American market. So I'll be sharing insights into both of those. While the Asian market is, of course, also important as the largest market in terms of both production and demand for labels. But due to the heterogeneous nature with China being very different from South Korea, for example, it's very difficult to track, let's say, the cost in this region. which is why we focus primarily on the North American European market. However, later on in my presentation, I'll also give some insights into secondary drivers in the Asian market, which are also driving cost increases. So as you can see from this chart, we track label materials. So looking at PE, BOPP, PT, thermal papers, C1S papers, hot melt silicos, glassine liners, and acrylic adhesives as well. So these are major components of primarily a pressure sensitive label, but also used in other label technologies. You can see since we've started tracking this in 2020, there have been huge price increases since the onset of the pandemic, essentially, driven again by several factors. And at the end of Q1 is when we started to see again these upticks despite some stabilization in the previous year in some key materials, particularly in filmic materials, silicones, which are driven largely by platinum prices, as well as some paper materials. We look at only films. We see that since 2020, for some filmic materials in North America, prices have basically doubled. For example, polyester, as well as for BOPP and polyolefin films. For papers, we've also seen an increase in costs in North America. This has been more driven by capacity situations in the region, as well as demand and just general supply and demand balances, more than the crisis in the Middle East. Whereas the price increases that we've seen in film, especially now in Q1 and expected to continue into Q2, have been very much driven by the war in Iran, the situation in the Strait of Hormuz, the increases in oil prices have had a significant impact on polymer-based materials. We look just at the adhesives and chemicals that we track, being acrylic emulsions, hot melt adhesives, and silicones. Likewise, we're seeing an increase. Again, this has to do a lot with the situation, is being impacted by the situation in the Middle East due to supply disruptions. A lot of the raw materials for these products are coming from Asia, and so supply is being disrupted, as well as price increases there, leading to price increases in the North American market as well. You can see silicone prices have had kind of the biggest spike. This is more due to the price increases in platinums and less to do with the situation in the Middle East, but definitely does not help. If we look at the European Cost Index, we see a similar picture to North America. So we track the same materials as we do in the North American market. Maybe a difference here is a more significant increase in Q1 compared to North America. Like I mentioned, the market has been in North America has been impacted at a later stage. So we expect to see these increases now when we release the results for Q2. Again, so here we see the increases for filmic material specifically. And this is the market that has really, or these are the products that have really been impacted by the war in Iran more than other raw materials. of course, everything is increasing. What we're hearing across the market is, for example, from a label converter, is that at this point in the past where maybe paper was getting more expensive or films were getting more expensive, now it's everything. So there are price increases for uh, paper products, filmic products, inks, transportation is getting more expensive. So it's across the board where the whole value chain is seeing price increases. Again, for papers, we've seen maybe a steeper trajectory in cost increase compared to North America. This has been largely driven by the energy crisis in Europe that we saw in late 2022 and going into 2023. So you can see kind of that upwards trend in that region. And even before the situation in the Middle East or the start of the war in March, Europe had already been dealing with just consistently high energy prices, as the paper manufacturing process is a very energy intensive process. Energy prices have a significant impact on overall paper costs. Um, if for the adhesives and chemicals, similar picture to what we see in North America. Have not, like I mentioned, films or polymer-based materials are where we're seeing the most impact, but we're seeing price increases across the board. So this includes for adhesives as well, especially where manufacturers are dependent on raw materials from Asia. We're looking at drivers. I've mentioned some of them, but I also want to give you the charts or the data to back it up as well. So when we look at paper, of course, it's very much driven by pulp prices. So we can see that in 2025, they remained fairly stable for all regions. There weren't any significant increases like we saw after the pandemic, but they have remained at a higher level than historic prices before the pandemic. It's not clear here yet, but going into Q2, we know that pulp prices have already gone up, and so this will also put pressure on the paper prices for label materials. Here you really do see the spike in polymer prices, both in the US, in the European region, as well as in China. Of course, China is not the only country in Asia, but it is definitely the one that has the most impact on the region and the most influential. So, especially Europe and China have felt these price increases the most compared to the North American market. That's not to say that the North American market has not been affected, but at this point has not been as severe as in the European and the Chinese market, which has led to price increases for overall label prices. You'll hear more from Wilco and from my colleague Alfredo about the imports from China. Some kind of anecdotal information that we've been getting from the European market is that there is somewhat of a decline in these imports now that they're actually becoming much more expensive, not only due to transportation costs, but just because of the material costs at the moment. Like I mentioned, energy prices have a huge impact on especially paper production. So in here, the green line, Europe, you can really see the energy crisis that started in, let's say, 2021 to 2023, stabilized, but again, remaining at higher levels than has been historical. And again, seeing a spike now in Q2, while Europe is more or less independent or not super reliant on the Middle East or China for energy. Obviously, the oil price increases have a significant impact on energy prices overall. So we definitely foresee more, due to these energy price increases, more price pressure on paper products as well as polymer-based products. And that is the end of my presentation.